Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Tuesday market webcast. All right, so we're still in this upper band ride. Didn't look like they were going to get it done yesterday, and then yesterday afternoon, they hopped it up over 19 was a really key price for us yesterday in the room. And once they converted that, and once the bears had been down and really weren't able to convert anything on the downside, even to go so far as to go down and test a new weekly pivot at 49.06. So we just kind of vacillated down here at the hourly mid band. You made a couple of lows, 12.75 matching lows here, and then as 19 gave it up, then you just went ahead and broke right out of this. You get compression. We talk about it all the time: compression, expansion, compression, expansion. So now we're on a shelf. So they've glided it back in to the hourly mid. The real question is, are we gliding it back into the hourly mid? We're going to test it, maybe have some volatility today, do something, not do something. Or are we going to find a shelf, hang out, not do much of anything at all until tomorrow at 2 when we'll hear from the Fed and we'll get some more clarity. A lot more unknowns will become known. So, what I was saying in the room yesterday is the same thing I will be saying today. Don't overtrade this. Look for opportunities. But don't try to create your own volatility where there is none if you're trying to short-term trade this stuff a couple of days ahead of a Fed meeting. If something strikes its fancy and it wants to move, it will. But if it doesn't, it's just going to grind everybody up. And if it gets to a point where it really wants to grind everybody up, it will stay in some kind of a 4, 6, 8 handle zone for, as long as it takes until we hear from the Fed. And the overtrading, the commission burn, all of it, the mental capital, everything will have you not in an optimum position to deal with whatever comes at you tomorrow at 2. When there will be opportunity, there will be volatility, there will be handles, because it is the Fed and it will move. So have some forethought. Don't come in today saying, well, I missed that move to the upside yesterday for whatever reason. Happens to people all the time. It's all part of trading. Don't get all FOMO'd up trying to turn candles, hourly candles that look like this, into an hourly candle that look like that. People do it all the time. Don't do it. Just don't. I don't have a ton more to say. Volume weighted average price at 49.51. Proprietary moving average 49. We're battling over the hourly mid, which is coming in. Call it 46.5. We're making Globex lows right now, 45.25. We made all-time highs yesterday, 49.57, 25. So we're up in blue sky, and you got to wonder. You got everybody just kind of waiting for it to come in, and nobody's asking the obvious question up here, which nobody ever asks, because most people don't want to hear it, which is, well, what if it doesn't come in? What if it doesn't come in? It doesn't have to come in. It doesn't have to do anything. Just like when it goes down, it doesn't have to bounce. But people wait, it's going to bounce, it's going to bounce, it's going to bounce. Oh, okay. Why don't you wait for it to actually bounce, or wait for it to actually come in? Okay? Because what's going to happen, say the Fed, the reaction to the Fed is positive. Okay? You're going to print 5,000 like it's not even there. It's going to happen. Then the question is, if it wants to continue on, which I'm not sure is a high probability outcome, but it's not really a very low probability outcome either. It's like, what do you want to do with it? If it wants to keep going, if it does keep going, then the dynamic is going to be weak shorts throw stuff at it, lose. Weak shorts, lose, lose, lose. Rinse and repeat, rinse and repeat, rinse and repeat. Don't be on the wrong side of that cycle, okay? I'm not sure if that's what Thursday and Friday are going to be about, but it could be. And if that's what it's going to be about, you want to be, you buy from them. Let them, wreck themselves over and over again as the market probably slow bleeds to the upside. That would be the dynamic. It'll be just iffy enough to have them step up and do it again and again and again. That's how grinding rallies at all-time highs play. Okay? It could go the other way. We could come in. If it comes in, then you got to be short. You got to be there. And don't anticipate a bounce. The bounce will come. And when the bounce comes, there'll be plenty of handles, plenty of time to get involved. There's always more time and more handles than people think there are in the moment. And because they don't think there is enough time, and because they don't think there's enough handles, they want to anticipate. And anticipating, you're going to get it wrong more than you're going to get it right. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.